Morning and welcome to the Opportunistic Trader for Friday, August 3rd. I want to briefly go over the trades that we did yesterday. We did 3 trades yesterday. We came in with a short position in Tesla, which we were not right in, but we were capped, so we lost the spread amount that we were short. So unless the stock comes in huge today, we're going to be called out of the position and on to the next. As well, we came in short S&Ps and covered on the low and made about $13, which was a good one for us. And then the next trade was trying the short side again, and we got stopped out for $8 loss. So that's sort of where we stand, and we're short crude oil from 68.5 area. So that's where we stood from yesterday. I want to go over today is a jobs day, usually very meaningful, but lately the market has been subdued, and we're usually getting 200,000 on the non-farm number. We should be right around there, and they're looking for a little bit of a downtick to 3.9 on the unemployment rate. I want to briefly touch on the Asian markets, which are very, very interesting, and China is getting annihilated, and they're almost down 20% for the year, with us being up over 5%, which is a huge divergence. I guess the market's looking like tariffs will not hurt us and will crush them. So we got to keep an eye on that and keep an eye on the yuan, which is going down pretty much, every day. And, looking across the board quickly in Europe, the news is really just looking at Italian bonds getting crushed again, yields up, which is pretty much risk off scenario, but we're not seeing it across the equity markets over there. They're up slightly, but they were down very large yesterday, so really haven't recovered at all. As far as this morning goes, the S&P is up $3. It's at a $4 premium. The NASDAQ continues to go higher. Yesterday's move was actually pretty miraculous, but it's pretty easily explained in the fact that every time they have tariffs, people overreact and get short, and the only way the market could really push higher is when you suck the shorts in that have little way to sustain, and we saw that yesterday in the market. But I want to be brief, so I'm going to pass it off to Vince. He could talk about the jobs number, the analysis, and other things that he's looking at, and then we plan to be back at you after the number with actionable trading ideas and thoughts.
Yeah. Thank you, Larry. Good morning, everyone. As you said, we got to keep it tight. People have to prep for trading, and there are things we're looking at, but nothing's definite. Just quickly, last night you had the Italian bond market would be the headline. That's a bad penny. It will not go away, and it will affect the euro. Your comment about the Chinese stock market is spot on, and I think for clients and listeners, it's important to understand that when the president of the United States says he's going to raise tariffs 5% on Chinese goods imported into the U.S., all China has to do, simplistically, is devalue the yuan by 5% to offset a large part of that. And that's what we're seeing. The yuan is being devalued, right? It's approaching 7 per dollar. And as to your point, the price of weakening the yuan to offset tariffs that the U.S. is potentially levying is a depressed stock market. And that's what's going on there. The jobs number is, as you said, if they can't find a number. They're going to just basically come up with 200,000. But Bloomberg survey predicted 193,000 rise in non-farm payrolls. Unemployment seen ticking down 3.9%. I think the rate of pay increases should be the most interest to economists. But personally, my trading yesterday, I was short silver, got stopped at it, went down. I'm on the sidelines watching. Other members of the team made some money in oil as well on the FX side. I think for me, and I would actually ask Larry what he's looking at, because frankly, I'm going to be flexible going into the number.
I'm focused mostly on S&P and equity indices, so I would be looking at the S&P, NASDAQ to reaction after the number. The market trades strong. I'm not really that bullish here, but I'm open-minded, and this will be the 5th up week on very light volumes, so we'll see if we can make it through the day on the upside. And looking at oil as well, but again, we'll have much better handle after the number just goes by. We're not going to have a position convicted into the number. We want to be opportunistic to react.
One other thing, one other data point on the commodity side, 1 p.m. Baker Hughes rig counts come out. I know that those have been discounted as less important based on technological advances, but nevertheless, people look at them, people watch them, people trade off them. So 1 p.m. when the Baker Hughes rig counts on the energy side. Larry, I got a quick question for you.
Sure.
It's supposed to be bad news is good for the stock market, good news is bad for the stock market. Has that been repealed for the last 5 weeks? Because it seems to me that buy strength, buy weakness has been a no-brainer. I mean,
well, I would say that it's worked that way, but yesterday was very interesting to me because the levels that we traded at were pretty much through almost everything for the last 4 weeks, and we opened in the low 90s in the S&P, which was lower than we've been for at least 4 weeks, and they didn't even hold those levels. They never really traded down there, and then they exploded up. But what I would say is what I said before. It's almost like they don't care about any news, good or bad. They just get bad news, the market trades down, and it gives them the opportunity to get in a little bit of shorts and crush them. But again, like I said, I'm going to be flexible into the number, but I think potentially, if we don't make a new high in here, that we're going to come into a seasonal period, and trading will be a bit more volatile. But that brings me to a point of yesterday when we opened down in the 90s. The volatility was up 10% pre-opening and ended down 10% on the day. So we had a 20% swing on the VIX, the volatility index, which on a 25 handle spool move, which is pretty much less than 1% or 1%, is an amazing thing. So as I said yesterday, I think volatility is under-owned, but the people that own it, other than in February, have been just getting crushed for years.
Do you get the sense that fund managers are long and not hedged? And I say that because of your comment about the VIX itself being so volatile. They're buying puts in the panic down and immediately puking them in the rally up. Or do you get the sense that they are hedged and this is a speculative play getting hammered?
I think they're under hedged, but it's worked very well for them for a long period of time. It's funny, when I was at Spear Leads in the 90s, I was actually in charge of hedging the firm's risk, the full position, because we were the largest specialist on the floor. So when the market was going down, we were getting long a lot of stock, and when the market was going up, we were getting short a lot of stock. So as market makers, we provided liquidity, And what was interesting is that position always lost money, but we were very happy that it lost money. But I think in the age of performance, where you're actually judged on a month to month, people don't want to lose basis points to the hedge. So, I think people are under hedged. That's just my thought.
Right, right. So greed has worked so far, and insurance policies are not being used to protect steady gains. I see your point. One thing on the metal side, it's on the radar, but it's not something to look at right now. There is a player out there buying platinum and selling gold for whatever reason. Who knows how that turns out? But there is someone out there playing that. But as you said, the numbers what matters today. And as ideas come up, I think there's plenty of people online that are going to be posting their ideas for people to just see.
For sure. Everybody on the team is on top of this. We're waiting for the number, and we will be back to you with commentary after 8:30 when it settles in, and our trades that we're doing. So we will see you after the number. Everybody, good luck.
All right. See you online. Thanks, Larry.